Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of your hosts for today. We've got a great show for you. We're going to dive deep into a lot of tax season issues, give you an update on what's happening at the IRS, and also get into single audits. So once again, the AICPA Town Hall Series is all about bringing you the breaking news, giving you our best interpretation and working on strategies and capabilities to drive greater success. We've been doing this now for close to 2 years. It's actually growing in popularity. We had close to 9,000 attendees last week. We've got a big team here that supports these town halls. We really appreciate your questions. And one thing that we're doing with these questions is that we're putting out a newsletter following the town hall, following the next week. It usually comes out on Tuesday. So I'm going to talk a little bit more about that newsletter towards the end of today's broadcast. But let's get into our topics. We're going to kick things off with Barry Melanson, talking about what's happening in Washington, D.C. Lisa Simpson's going to be joining as well. We're going to talk about the IRS service issues. Then we're going to get into some of the tax filing hot topics, which Lisa's going to cover. And then we've got the AICPA leader of the government audit quality section, Mary Forrester, who's going to do a deep dive into single audits. And we'll close things out with our open forum. So here's today's lineup. So right out of the gate, I want to welcome Barry and Lisa, who you all know very well. So let's jump right into some of the breaking news. And we're going to start things off with, Barry and Lisa, are two articles that came out yesterday. The first article here is shows some quotes from Senator Manchin. And Barry, the last time you were with us, we've got a little bit of background noise there. But the last time you were with us was January 6th. And we were talking about the Build Back Better legislation, and it looked like there was still a chance on some compromise. As we see here in yesterday's article, Manchin declares it's dead, and then there was a question, would he support a smaller version? And he said, I don't know, I need to see it.
Well, Eric, good to be with you, and it's sort of like what is the definition of something being dead in the political process, right? I mean, it's a constant evolution. Something new is there that's maybe a lot similar to what was there before, and it may be something totally new. I think the message here is certainly a big package, a multi-trillion-dollar package is not going to happen. Senator Manchin has put up very significant oppositions to those. I think from our members' perspective, those tax provisions, which are, there's a lot of concern about having to deal with those during tax season and answering questions with clients about what about the new tax law, what about the planning. I think that sort of gets past April 15th for sure. If there is anything that moves forward, it's going to be much smaller. So something less than $1 trillion, as opposed to at $2 trillion, which was considered small, even at the beginning of the year. And what might be in that package is certainly, a bit of uncertainty. And then it obviously have to go back to the House, although there is some indication that anything the Senate passes, the House at this point will probably accept. So I think from our members' perspective, there's a couple of issues that have been associated with that. One, I just said, in the middle of tax season with a big bill, the ramifications of that creates a different kind of dialogue with clients. I think you can put that totally on hold until, after April 15th. The second is effective dates of anything that gets passed. And we have been very clear on the fact that now this bill has sort of taken a totally different turn, that effective dates have to be addressed. And they can't just be left at the last minute. And we've issued from our tax executive committee, letters on this, really calling this particular point out. It's a very important part to tax administration. And of course, no one knows exactly what will be in it, but our point is they're going to rewrite the bill, a massive rewrite of the bill if it moves. And they need to include in that rewrite a rewrite of the effective dates. And I think that's probably the two big takeaways.
So in some ways, there's a little bit of good news here that, the last thing we want is major change at this point. So with it pushing out, it's something that if changes do occur, they'll be able to be done in a more rational manner. Moving on here, Barry, this is the other real hot topic for the firms that are attending today's call. We've already got a number of questions coming in related to this. Something we're going to be covering a lot of the topics that I see that are coming in. But here's an article in the Washington Post that came out yesterday. This was an op-ed done by Nina Olson, the former IRS National Taxpayer Advocate, who was in that position, for 15 years plus. In this article, she highlights this letter that the AICPA in the broader coalition sent out, which got 191 signatures from the House, 21 from the Senate, and that's rather significant. When you look at other letters that have been generated, you usually don't get this type of support. So it just shows the extent of the issue.
Yeah, and we'll come back to this again, but that kind of support, bipartisan, bicameral bipartisan, is really a testament to the people who participate in this town hall. And we've been saying, get your clients to contact the members of Congress, and that type of feedback is really what's produced this type of all hands on, from a Congress perspective, support of trying to get this resolved. Yeah, Nina has been, active as the National Taxpayer Advocate for a long time, and she goes into the service issues. I would take two things out of it. One, she makes a point that the IRS talks about, and a lot of people talk about the need for additional funding. No one argues against that. We certainly don't. So we agree with her on that point. But she points out that's not a solution for this particular year. That's not going to get us through this particular tax season. Yes, technology issues, a whole host of things that are out there, and we would agree with her. And it's a very important point, but again, not going to get us light at the end of the tunnel between now and April 15th or even in the summertime. The second thing, she cites our letter, what our letter is about, and to just remind everybody, is about 4 what we would say is practical, you can do now, and sort of relieve the system a little bit steps, really around the issue of continuing notices and more leniency on the way penalties are being calculated, the freezing of accounts. 4 really common sense, I would say, points about you have a backlog problem, you have a service problem, turn off the things that are really continuing to add to that problem. And she actually supports that in writing her op-ed. And I think that's a very strong message. Again, a takeaway for those of you listening, if you do tax work, you're going to have clients who are going to say, I've got this frustration. Some of them are going to want to blame you, etc. And I think you can use both our letter and the Nina Olson op-ed piece out of the Washington Post to really share with your clients and say, it's not us and it's not you, Mr. or Mrs. Taxpayer. It really is the system that is causing the problems that's producing all the frustration for you.
Absolutely. And just to let everyone know, our letter and I think this article is in the resources section of the webinar panel, and you can download that by leveraging the toolbar at the bottom. So let's Barry and Lisa get into some of the additional details related to what's happening with these IRS service issues. And some of these things, we've already got a number of questions about ID.me coming in and concerns that some of the attendees have around that.
So let's hit these, and Lisa will add some comments. I think number one on that first bullet there, and we already covered the first point, but the second, the recent service issues. Not only have we been getting your support, but we have been working to build a coalition of people who are broadly in the tax preparation space, different backgrounds, et cetera, to really also make the same point that we have made that has generated this support. On February 8th, so that's next week, we're going to actually have a coalition webcast which you can join. It's free. That the participants are going to be sort of laying out their stories and their points. So it's not just us making these points, to really actually cement the messages that's coming through this congressional letter. And 200 plus members of Congress have weighed in, as Eric, you mentioned. And that's a really, really powerful point. But I'll give you another data point. It'd have been a lot more, but we had to cut it off. We had to cut it off because we actually had to get the letter into the system. And now more members of Congress are actually writing individual letters, basically making the same points. And so that webcast is trying to get things, continue to keep things moving. Now, let's be fair. The IRS has made some announcements. Now, they've made some announcements on some things that they're trying to do. They've made some announcements of maybe repurposing some employees. All of those things are good. So we want to see those things happen. But to date, there hasn't been a collective response that is going to, what we believe, really help the problem. Yes, steps in the right direction, but not really comprehensive enough. And so that's why this coalition webcast is very important to continue the emphasis, the profile, if you will, in this area. And the last part of this says you can help. Your clients have issues, you have issues, you can continue to make those outreaches, as we have given you the directions to do so to members of Congress. And 3 other areas that are out there that are sort of in the discussion phase. The fire system outages that have just occurred, which deals with filing. There's a lot of fear about, does that generate a whole new system or a set of penalty notices and non-compliance notices and the like. And we've been making this point very clearly as well, that this can't be another sort of element in this process. And I think the IRS clearly knows that the system outages created those problems. It's going to give some leeway, but they actually have to be able to execute on it. The robocalling issue, as we call it, the issue where people are paying to get a sort of a line in a place in line to get a phone call answered. There's 2 sides to this issue, but Congress is very interested in it. I think they believe that there's something very wrong with people having to pay to have access to the IRS system for their call to be answered, which we certainly understand that issue. But there's some of our members that have probably used that service. I think it's an important takeaway to understand that this is in the high profile stage right now. There's a lot of people concerned about it. There's a lot of talk about penalties and a lot of talk about trying to do away with these types of capabilities that is going on in this process. And I know some of our members have said, when there's the robocalls are in place, it makes it harder for me or for my clients to get through the process. And that's a true statement. So this is a very dicey issue, but I will say this, it's a symptom of the problem, right? It's not the problem in and of itself. It's a symptom of the lack of service problem. So we go back to what Nina Olson said, to what our letter said, what the coalition is about, and saying, let's do some things that can have some practical impact in these next few months. And then you're going to have less need for the type of robocalling. And Lisa, you might want to comment. I know you've gotten a lot of calls on the ID.me concerns and about, who is this and what's the controls and security. There's a lot of concerns about this. And maybe the biggest one is, why be implementing new technologies when you can't get the technologies to really work well that's out there?
That's a lot of what the concern is, and simply concern about identity theft. But the reverse of that is you want there to be some controls. If someone's calling in to try to get your taxpayer information, you want to know it's you. So to your point about the robocalling, there are 2 sides. But what we're hearing is that setting up your ID.me account isn't very easy. So there's some concerns around how's that going to impact some of your clients who might not be as technologically advanced as they need to be, or simply don't have the time to deal with getting that account set up. It's not required to file your returns this year, but there might be some instances where you need that to get access to some of your information. So
yeah, I've heard the stories too, where the picture, isn't coming through, and you got to hold up your driver's license or whatever, and people are very concerned about that process. And I think, again, it's probably well intended to try to make the system work better, and certainly ID theft is a big problem, but there's just this uncertainty. And Eric, I'd close on this. I think we all have to understand we are preparers, your clients, we're part of what essentially is a voluntary tax compliance system. Yes, we know there's audits and there's compliance systems that help make the voluntary part work more efficiently. But what we are facing right now is a lack of confidence in that system because of the difficulties of just dealing with the basics. And, that really, if you step back and think of it at a macro level, the IRS has a very important role to play in our country's financial, well-being and the collection of taxes that have been levied by law. And there's just cracks in that because people don't have that confidence. And the way you get really effective and cost-effective voluntary compliance systems is to have confidence in that system. And that's really our key message. It's not bad people at the IRS, but it's a tough situation, and we need to fix the basics so that people can have that confidence.
A great summary, Barry. I mean, I think what you said just a moment ago, that recognizing that there's this massive problem, and like the robocalling service, what people are just trying to do is put solutions in to address the problem. But over the last couple of years, the number of governmental programs have been put in place. The stress is on the governmental systems, and at this point, they just can't handle it. They're way behind, and I think the coalition's effort and what's happening here with Congress hopefully will start setting things in the right direction. One thing that we're getting, that Washington Post article was not in the resources. You can obviously get that by Googling it. We'll put that in the newsletter. So Lisa, we're now going to go deeper into some tax filing items, and I'll let you cover them.
Yeah, this continues the theme of IRS challenges. One thing we do want to mention, though, is that we're getting some reports that coming out today that the IRS is either shuffling 1,200 employees or bringing back 1,200 potentially retired employees. So we're hoping that some of the messaging around staffing at the IRS is getting through some of the challenges, training, and are they going to be really helpful before the end of tax season. So we'll keep you posted on what we're hearing about that. But this is an issue that a lot of you might look at that title and go, doesn't apply to me. International related pass-through entities. But this is an issue that is bubbling up very quickly because of some changes in instructions around some forms. So bringing it to your attention, if I could have put up a meme right now, it would just be, it's complicated. This is a really complex topic that seems really easy when you just read a headline. But what's basically happened is that the IRS in 2020 released some new schedules for pass-through entities. And so if I say partnerships during my comments about this slide, it's partnerships and S corps. So it refers to pass-through entities. And the forms are called K2, Schedules K2 and Schedules K3. Initially, the idea was to provide clarity and transparency for the owners of these pass-through entities, to give them information that they would then use on their personal returns to calculate whether or not they have any foreign tax credits that they can take advantage of, what those credits are, and those kinds of things. Initially, the instructions came out and it looked like unless, if you didn't have any foreign transactions, foreign partners or shareholders, and you didn't have any foreign taxes paid, then it might not be an issue for you. But in January, the instructions were changed, and there is going to be broad applicability to pass-through entities. So as an example, Even if your S Corp or partnership client didn't have any foreign tax payments, you might still have to file these schedules because there could be a partner owner at any level who might have some information that's going to come into play when they file their returns. It gets worse. So the IRS system isn't ready for these schedules to be e-filed. So the latest information that we have is that if you're filing a partnership, K2, K3, you won't be able to e-file that until March 20th. It gets worse. For S Corps, it might be mid-June before the systems are ready for that. Our tax team, our tax advocacy team knows about this issue. We've engaged a task force around international issues to dig in and continue our advocacy efforts. We'll continue to get out information about this. But right now, it looks like there are a couple of options, and I feel really sorry to have to tell you these are your two options. One option could be to extend your returns until this e-filing information or e-filing systems are ready. I know that's not what a lot of us want to do. I've gotten several emails this week about how many clients could potentially have to be extended at the entity level and then at the individual level. So that's not a great answer. And so that's something you're going to have to consider on a client-by-client basis. Another option is the IRS is allowing PDF attachments that would have the information that these K2s and K3s are asking for. Again, that's not an easy answer. It could involve manual work because your tax system isn't probably ready to populate those forms. So again, this is a bad situation. It is going to create a burden, and we'll continue to work on the issue. The good news that I can offer is that the IRS has announced through this Notice 2020-139 that there is penalty relief for reasonable efforts to comply. So they're recognizing the challenges of getting all of the information about partnership, about the individual partners, and whether or not this requirement is going to apply. This is a transition year, so they're giving some relief measures, but it's not blanket. The taxpayer, the entity, has to show that they've made reasonable efforts to track down this information, even if they aren't able to get it all. They have to, there are a couple of different ways that they can show that they're making these reasonable efforts. And one is by simply modifying processes and systems in place to capture information that then is going to go on to a K2 and a K3. So on the next slide, I've listed out for you.
Lisa, well, maybe Barry, I was going to get Lisa and Barry just to tee up. Lisa, there's a lot of thank yous, and there's a few people saying "ugh" out there.
Ugh is right.
Ugh is right. Ugh is right. I want everybody listening to know when Lisa said she feels badly about saying all of that, that's not just a statement she's making on this town hall. She has said it privately in our meetings. She feels awful that we're bringing you this without a solution, because as all of you who have followed Lisa bringing information with PPP and everything else that we went through, she was always about trying to bring, solutions, and she's fantastic about it. And she's, I think, representative of our entire staff that really wants to bring you solutions, and she legitimately feels bad about it. The other takeaway, I think, is just you can't ignore it. I mean, and these K2 and K3s, if you aren't familiar, they're pretty lengthy forms. They're not like a one-pager here. They're 10, 15, 18 pages long. And so it is another one of these, particularly when the IRS systems can't accept it. It's another one of these self-inflicted type of issues that, just makes tax season even worse. Obviously, we're on top of it. As soon as there's anything that changes, we will provide that. But Lisa, thank you for that very difficult and good explanation.
Yeah, I always like to bring good stuff, but not in this particular issue. But a shout out to Alex and April, who've helped educate me, and also to you guys who've been letting us know about the challenges that this is creating within your practices. So we know this isn't an easy one. I've listed a lot of resources because, again, this is going to be a client by client kind of calculation that you're going to need to do. And I would call your attention to that September article that just kind of lays the groundwork about why this change is being made. And then that's a great podcast on really good practitioner insights that came out before the latest round of instructions. So then we've given you links to the instructions. Check for who has to file. That's where I would direct you to see if it's going to be relevant to you, but assume that there is broad applicability. All right, more tax season fun. April Walker created a great blog on tips for managing tax season. So I wanted to pull out some of her key insights that we're getting from practitioners. And there's a lot of concern about the advanced child tax credit. The most important thing is to make sure that you're getting information from your clients about the amount that they really got. Don't let them say, I think I got $1,200. You need to make sure that you're getting their letters that were sent to them, or that they are logging into that account that they created with their ID.me that we all love, and are recording the actual amount. Because if not, if an amount gets reported on their tax return that doesn't match what the IRS system says, then it could get flagged. It could delay any refunds or just get caught up in the system. So just be careful around that. There's some great IRS tips that you can send to your clients, or just make sure that you're familiar with. Also, as a reminder, if they did receive the advanced child tax credit, you're going to have to fill out the Pay Preparers due diligence checklist. And we've got some resources for you around that. So that's one tip from the peer group. And then the next is to make sure that your online access is set up. We have gotten a suggestion from a practitioner who asked everyone on his team to set up their ID.me account. That gives them more insight into what their clients might be dealing with, and give them some resources that they can use to help as clients start trying to fill that out. I haven't tried yet, but the feedback I've gotten is it can be a little challenging, as we've discussed. Cryptocurrency, I basically just quoted the language from tax filings this year, where basically at any time, did you receive, sell, exchange, or dispose of virtual currency? So we actually have a virtual currency resource center for you that we've given you a link to. And we're going to take a deeper dive into cryptocurrency on our next town hall. So stay tuned for that, and we'll get into some of the ways to track basis in those crypto transactions and those kinds of things. And then another tip, you've heard me say this before, but you've got to get in front of those extensions and really set hard deadlines for your clients to get you the information if they want their return filed prior to the April 18th or April 19th deadline. So make sure that you're communicating those deadlines and sticking to them. Okay.
So a little bit of a pivot here, Lisa, now.
I'm sorry?
I said now just kind of a broader look at tax season.
Yeah, so that was all some really fun, exciting stuff. But I wanted to talk about opportunity, and you're all cringing when I say opportunity, I know. But there are some really key components to having conversations with your tax clients that you can start having now, but then dig into after tax season. So, when I was in public accounting, my clients were asking me everything about, how should I be planning for retirement? Oh, geez, now I've had a couple kids. How am I supposed to save for college? I got to buy a house, and or it's time for me to sell my business. Now what? You're already having these conversations with your clients. They already know that you're a great resource for these conversations. But what we're asking is, are you actually setting yourself up as their trusted advisor in this financial planning area. Financial planning doesn't have to mean selling investments, but are you taking that conversation to a deeper level by creating that formal conversation with them and then saying this is an add-on service? So we've gotten some great resources for you. These are two of my favorites, and they're absolutely free. So I wanted to make sure that you knew about them. The first one is, it's a checklist that you can come back to after tax season. I'm not asking you to do this right now. If you've got time, that's great. But after tax season, we have a resource that you can use to just go through a tax return and look for those opportunities to work with your client on financial planning. You can also give your clients a scorecard that can help set the framework for those conversations. And, I know that it's tough to find the time. You may not feel like you've kept up with all of the retirement planning with Roth IRAs and changing limits and estate planning and those kinds of things. But we have some great resources that can get you up to speed so that you can dig in a little more with your clients and have those deeper conversations.
And Lisa, just let me add to what you said. I mean, over the last 2 years, we've said it's been a defining role for the trusted business advisor. I mean, what you're highlighting here is to be the trusted, personal advisor. And what we are seeing is that there is a small growing group of firms that are just looking at, evolving the tax line into this ongoing trusted personal advisor service. So you actually turn the compliance service into a 12-month service, and I think there's the capabilities are coming out to support this as well. So this guidance from PFB is a great starting point, and I think this is something that we're going to work on. We're going to work on to advance capabilities for firms to play this holistic role for their business clients as well as their personal clients. Barry, I don't know if there's anything you want to add on this before we move on to the next topic.
No, it's a very important subject because I think generationally that the next generation of taxpayers, the generation that's entering the workforce, has recently been in the workforce, who will be the successor clients in many instances for CPA firms, are going to look to this much more routinely than the older generation that is moving towards retirement. So I would just put it on your radar screen with that in mind.
So we're going to close out this section. It's kind of a lead-in to the next section on single audit. But there's a lot of work being done at the AICPA on enhancing audit capabilities and qualities. One thing that we're going to talk about at a future town hall is the dynamic audit solution. It's one of the largest initiatives ever undertaken by the AICPA. Sue Coffey, who leads the public practice area at the AICPA, and I are the co-sponsors of this. It's a very exciting initiative that is really going to build a transformative capability for firms, and we're moving into a general release of this solution later this year. And then we've got the ERISA audit quality study and single audit. So Barry, maybe you offer a couple of comments on this, and then we'll have Lisa and move into the next section here.
Well, the DAS, stay tuned. It's a very important part of evolving the audit, and for small firms that maybe don't see audit as part of their practice set as much. I think this is, technology is changing what an audit will be, and this is really what that's about. And I think important to just pay some attention to. On the ERISA quality study, we have been talking about this happening. We think everybody that would be in that sort of random selection from the Department of Labor has probably been notified. I can tell you the feedback that we're getting is that they are going about that in a very sensitive to the tax season type work. They have promised us to do that, and they are living up to that. If you've been selected, just be aware that is out there. And I think most of the work they intend to do where it doesn't require interaction with firms during tax season. But that is a once every 8 year or so study, normal study. in that process. And of course, we need to be cooperative there. And single audit, we've talked about that over and over again, something in the neighborhood of about 10,000 of these engagements, 7,500 to 10,000 of these engagements that will be out there that didn't previously exist because of government monies moving from the federal government to local entities. And we really got some additional time coming on that here in a moment.
Okay, Lisa. So Barry and I will step down, and we'll let you and Mary take us through this next section.
I love this town hall because we've talked about tax, we've talked about financial planning, we've talked about cryptocurrency. Now we're talking about audits. So this is a perfect town hall, and I'm so happy to have Mary Folster back with us to give us the current landscape on relief programs, what's subject to audit, what some of those audit requirements might be. So Mary, thank you for coming back. This has been a hot topic, and I appreciate you coming back to talk to us about it.
Great. Thank you so much, Lisa. I was in a meeting yesterday where I heard someone from GAO say in total, the pandemic funding so far is over $4 trillion. And while not all of that is running through single audits, I'm aware that well over $1 trillion is running through federal programs that will become subject to single audit. And
that's a great data point.
Yeah. So I guess what I'd like to do, since I know a good part of the town hall audience may not audit governments or not-for-profits, they focus on for-profit entities. I thought I'd start with kind of running through some of the key programs that the for-profit entities that have received certain funding are becoming subject to audit on. I'll go ahead and say that PPP is not on this slide. Hopefully by now we've all talked about it long enough and know that that particular program was not designated as subject to single audit. So fortunately for our team, that's one that we didn't have to work on. Lisa, I know you had a lot of work to do on that program, but it has been interesting to see for the first time, really, the federal government deciding that some of the funding that's being passed down to for-profit entities will become subject to single audit or something like single audit. So the good news on this slide, the first two programs that are listed are not subject to single audit. So the restaurant revitalization and the idle loans are not in the bucket for being subject to audit. I will caution again that this slide focuses on for-profit entities, and some of the programs that I'm talking about, like idle loans, for example, there's a different answer when you're looking at governments and not-for-profits. But for purposes of for-profits, the idle loans are not in. The next two programs on this slide really are the ones we've been spending the most time on recently. The Shuttered Venue Operators Grant went primarily to for-profit entities. We've heard there's between 3,000 and 4,000 total for-profit entities that got this funding. And many of them will have 750,000 or more, which is the trigger for having an audit of this program. The SBA, as you all know, is a very small federal agency managing this program, has spent pretty much all of their time so far standing the program up and getting the funding out. So we have just started engaging with SBA on exactly what the audit requirement, how it would be implemented for these for-profit entities. So if you look at the guidance that they've issued so far, one piece of guidance says that the audit could be either a financial statement audit or a single audit or a program-specific audit. Another piece of guidance that they've issued talks about either a financial audit of the award or a single audit or program-specific audit. We believe, based on our most recent conversations with them, that they're going to go back to the financial statement audit or single audit. But we have a meeting with them next week to really begin fleshing out the details on these engagements. And we are stressing to them that many of these for-profits have 12/31 year ends, and the guidance is needed. So if you have clients that receive this funding that are for-profit entities, I think my advice would be just to hold off a bit longer until you really start digging into this so that we can work with SBA to get the guidance out there that's needed to carry out the engagements.
So Mary, a question for you. If we get a program audit, is that going to need to be under governmental auditing standards?
Yes. So it would be an audit that would be done under the AICPA's auditing standards as well as government auditing standards. And those government auditing standards are issued by GAO, and they have certain criteria that auditors need to comply with to be in accordance with their standards. They have CPE requirements, they have independence requirements that are different than the AICPA's code. So for anyone that's getting into these engagements that have not really delved into government auditing standards or what a compliance audit is all about, I would caution to tread very carefully and really think about it before you get into it. And certainly if you're going to get into it, to make sure that you've gotten training to make sure you understand what all the rules are about that. And the Quality Center is offering a lot of almost everything we're doing right now to the broader public and membership because of the crisis. So a lot of our events and things like that are being made available either live or in an archived fashion on our website. And I have some of those later in the slides.
And I guess we have a concern because a lot of these entities may not have been audited before ever, right?
Right.
Because they're small and they're not used to getting this amount of funding.
That is correct. And so that, it's adding to the challenge of doing the audit, right? And not only that, these audits are maybe a 1 year, 2 year thing. It's not like it's going to be an extended period. So that is a challenge. And we have been communicating to OMB and several of the other key grant making agencies just about the challenges and around all of this, and the need to make sure that we have a pipeline of qualified auditors that are going to be available and ready to do the audits, and that we have entities that are ready to be audited. So certainly I think they've been hearing us, and in some cases anyway, and attempting to put out guidance that will help make things easier for the entities to understand what they need to comply with, as well as for the auditor to carry out the engagement. So the other program here, the Provider Relief Fund, is a massive, big new program. We've spent almost a year working with the Department of Health and Human Services on what the for-profit audit for entities receiving this funding would look like. And when I say these entities could include large for-profit hospitals down to doctors' practice groups. We've heard from associations of all different sorts of doctors wondering and asking us about what is this requirement about? How do I find an auditor? What do I need to do? So we have been working very diligently with HHS to come up with an approach for the for-profit audits that will be something our members can do and something that will be beneficial for HHS. The nuance about this particular one is that they're allowing what they call a financial audit of the award, or a single audit / program specific audit. And I don't want to get into too much detail, but we really think most entities will choose the financial audit under government auditing standards. And so we are within a couple weeks of releasing a practice aid, which I'll talk about on the next slide, that will help auditors do this work. And it's pretty comprehensive. It starts off with a series of frequently asked questions. It talks about what the schedule that would be audited would look like. It talks about what type of report actually the auditor would issue. It talks about what the notes to that schedule might look like. Again, these are all illustrative. And we also include a primer on what government auditing standards is. Again, we talked about already, a lot of auditors may not be as familiar with government auditing standards. So that is something that we're really very happy to be almost done with. And we've also just had a web event on this. Basically, it was kind of a pre-release of some of the guidance that's going to be in the practice aid. And that event is being archived on our Quality Center website, and it is available and open to the public. So we are not limiting it only to GAQC members. And so we may even be rebroadcasting that event at some point in the near future because we had so many, so many people interested in the topic. So if you're auditing a for-profit healthcare entity or a doctor's office, again, some of these entities have not had audits before. If you're approached to do the audit, we would highly recommend that you check out the guidance that we're getting ready to release, because it will answer a lot of questions about what the engagement is about.
I know none of my doctor clients were in practices that were getting audited, so I am sure that's going to catch them off guard.
It will, and they have their own associations, right, that are trying to help them, and it's going to be a challenge. And again, these entities all have, many of them have 12/31 year ends, the for-profits. So now is the time that people need to start beginning to think about how to do these engagements.
Okay.
So another key document in doing single audits, and this is relevant not only to people doing for-profit engagements of entities getting some of this funding, but also auditors that are doing audits of state and local governments or not-for-profit organizations, is the OMB compliance supplement. And because of the pandemic, this important document has been delayed both in 2021 and even last year in 2020. So this slide is really just informing everyone, if you're not aware, that the 2021 original release of the supplement came out in August. There was an addendum that was issued in December that included the very large new coronavirus state and local fiscal recovery fund, which I'll talk about in just a few minutes, as well as an update to the education stabilization fund. Again, a very large new program that went to institutions of higher ed and K through 12 schools. And then an addendum 2 was just issued in January. So keep in mind that the supplement applies beginning last June, for June 30 year ends 21, and some of these pieces we're just getting now. So that is causing some serious backlogs in practitioner schedules and getting these jobs done. So it is what it is. At least now we have all the parts, but now there's this influx of auditors trying to get out there and finish their single audits.
Good to know.
This is another program. Again, I put it in even though I don't think it's going to be a big deal to the for-profits, but I mention it just based on the vast size of this program. It's $350 billion. Department of Treasury is the agency that's sponsoring it. It went out to over 30,000 entities, states, local governments, very, very, very small local governments that typically wouldn't even normally get federal funding in a number high enough to get a single audit, and also tribal entities. So this program just had final rules issued for it, and I provided the link there, and there's an overview from Treasury of the final rule that's 44 pages long. So that can only tell you how long the final rule for this program is. There's a lot of requirements that surround this program. We have been working with Treasury and OMB recently. Again, I mentioned that concern about just the number of these engagements and our concern that there may not be enough auditors that actually have the qualifications under government auditing standards and single audit rules to see if there's a way that they can come up with an approach that may be more simplistic than a full-blown single audit. For some of these entities, if they happen to get other small funding, and then this new program throws them over the threshold, not only would they have to have a program audit, but that would throw them into the realm of a financial statement audit, because a single audit requires a financial statement audit. So that's a big burden, and some of these entities are very small. It's rather intriguing. You might want to go look on the website. Think of the smallest town you have in your area and look on the website to see how much money they got from this program. It's quite amazing. So the good news is that we've gotten some traction on this with Treasury and OMB, and we're starting to work with them on coming up with an approach that maybe would let some of these entities get something less than a full-blown single audit. So with this number of entities, I would just guess some of the firms watching today could be approached by different entities that are looking for audits, and this program would be the driver of that. So we hope to have this settled with Treasury and OMB in the coming weeks. There'll be some ongoing meetings, and hopefully we can communicate back through the town hall and through the Quality Center as things progress on this program.
So we'll stay tuned for the update, but we wish you good luck in your conversations with them.
Yeah. And then quickly, Lisa, just the last slide here, just a couple of other kind of hodgepodge things. We are in the process of working with OMB on the 22 supplement. They've been getting a lot of pressure to get it out more quickly this year. And so their goal is to get it out on April 30th. It remains to be seen whether that will actually happen. But I will mention that there will be a section for the Shuttered Venue Operators Grant that will be added to the supplement for 2022. And we are pressing OMB and the SBA, once they finalize that, if perhaps they could release it early so that all of the 2021 engagements that would include this funding can see it and use it for purposes of their auditing. I know audit extensions is another hot topic. The 6-month audit extension that was out there for single audits only ran through June 30, 2021 year ends. And we have been strongly advocating for an extension of the submission extensions through at least the 12/31/21 year ends. That would certainly help some of these for-profit entities that are getting thrown into this. So we issued a rather strongly worded letter just in the last couple of weeks over to OMB on this, and I know that they are considering it at their policy level. So we have our fingers crossed that maybe we can get a little bit more time for some of these engagements.
That has been a common question, so thank you for bringing that up. We're getting lots of questions from firms trying to figure out, how to schedule out their work, how to get it planned. So thanks for bringing that up.
And then lastly, our COVID resource page, I put the link here so that folks can take a look at that and see what we've put out there. And finally, kind of in the midst of all this, I just want to make sure that practitioners don't forget that the AICPA auditing standards that updated the report language became effective for 12/31/21 year ends and later. So we did have to update all of our report illustrations, and I've indicated on this slide, how folks can find that new updated language.
That's great. Thank you so much.
Sure.
All right. So with that, let's see what other questions we've got.
Well, I can tell you this, Lisa, we've got some questions. We've got another, 88,500 attendees with us today. We've got 550 questions that have been submitted. So it's been a very, very active session. So one, just on the materials, Lisa, there's some questions related to the PFP tools that you referenced.
Yeah, so you just need to go onto the site and create a free user account, and you should be able to access that. And creating your user account is just your email address and then a password. And
also a lot of great comments about both the AICPA letter. Also, people appreciate us highlighting the Washington Post article. Some people had some issues accessing that. We'll get that out in the newsletter. We'll ask a non-related tax question, Lisa, but one of the topics that we've covered a lot over the past 2 years is PPP. We didn't give an update today. There's not much new news. It's progressing. We continue to meet with the lenders. The lenders are very focused on getting those forgiveness applications in. Is there anything that you'd like to add related to PPP status? Forgiveness.
Yeah, I guess now this is just even a more perfect town hall because we're talking about PPP. There is a very recently released procedural notice from the SBA that addresses situations where a borrower applied for less than full forgiveness and the lender approved less than full forgiveness. There are some new processes out around how a borrower can come back and appeal. So we'll be digging into that and we'll come back to you on the next town hall to talk about that. Everything else has been fairly quiet as far as we're hearing, but on a call today with some of the SBA lenders, there are still some 2020 forgiveness applications that are not moving at the SBA. So they're trying to do some digging around to break up that logjam.
Yeah, and the comments coming in, a lot of people are talking about how they've got a PPP forgiveness application approved in 7 or 8 days. So we're hearing a lot about positive experiences, and that this actually is a good client experience for many of the firms. There's less stress than the application phase. Barry, so just any other kind of, as you kind of reflect, listen to the last discussion, just but back to the kickoff here with the IRS, with tax season, you gave some good tips on how to message what's happened related to the legislative activities. Any other tips that you'd like to throw out to the practitioners?
Well, I think the biggest one is if you're incurring some element that you don't think we're aware of, don't hesitate to make us aware of it. That maybe is the biggest message to take away at this point. Obviously, if you're a regular, you know the types of things we're certainly aware of and sensitive to. But if you've got something unique and you think we need to know that, don't hesitate to tell us.
Lisa, anything that you want to add from a question standpoint as we go over 600 questions as I see here coming in?
I'll be honest, I haven't looked at the questions. I saw something about someone's 7-year-old who's had to listen to the last 2 years worth of town halls, so I can't wait to get back to that one.
Okay. Well, with that, why don't we do have a summary slide? Let's kind of bring it. We'll all stay together here. And the first thing we got a few other resources we want to highlight. So, Lisa.
Yeah, this is a great podcast series that we've talked about before, but there are a couple of new podcast episodes that I want to make sure we call out. And one was just recorded yesterday. It is hot off the presses. So it's Ed Carl, our Vice President of Tax Advocacy, and April Walker on our tax team, talking about some of the possible remedies for what's going on with the IRS right now. Tax season deja vu is a great conversation with a practitioner about practical tips and insights on how to navigate tax season.
And you also can access all the recent town hall series. You can access them on YouTube as well as via podcast, and you're welcome to share them with your clients. And one thing that we're going to try to do is start slicing them up into different segments, so they're more easy to forward and digest and leverage in other ways. We're continuing to think about how we can make the town hall as useful as possible for you. So here's our summary points for today. Another good reference slide for you. I mentioned this at the start. We are working on just adding value to the town hall through this newsletter. It comes out the following week. We do leverage these 600 plus questions, or however many questions that come in. We try to address some key issues that maybe we didn't cover completely, or you do point out new things to us, and we always are trying to make sure we get the resources to you. So if there's some link that we need to correct, we'll do that in the newsletter. One other thing I'd like to highlight is there's about over 30,000 people in the newsletter. A few of you need to opt in for some reason. Maybe you've opted out at one time. So if you're not receiving it, you can go to this link and give us your email address, and we will opt you in. So that brings us to the end of today's edition. We'll be back with you on February 17th. We're going to do a deeper dive into crypto and tax compliance, as Lisa mentioned, and we'll clearly bring you any latest news related to the tax filing season. So thanks again for being with us. Thanks, Lisa, Mary, and Barry, and we look forward to seeing you all again sometime soon.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.